Greg, it's good to have you, and this is peculiar. What's going on?
Yeah, you're absolutely right, Kelly. It is peculiar. This is the first time we've seen this kind of phenomenon in about 7 years. For much of the last 6 years, jumbo rates were actually running below those of conforming rates. And what's happened is that when the Fed stepped into the market with a blank check in late March, early April, and started buying government-backed loans, the rates for those loans plunged. Jumbo rates, not so much. So at the beginning of the year, jumbo rates were lower than what we see on conforming. Now, as you noted, more than 0.4 of a percentage point higher on average.
What's the break-off point now for something to be considered a jumbo mortgage?
In most markets, it's $510,400 in designated high-cost markets, particularly along the coasts, California, New York, Washington, Boston, those areas. It's higher. It's $765,000, $600,000. If you're close to that threshold, I think it makes sense to look at making a larger down payment so that you can borrow the entire amount at the lower conforming rate, many of those rates well below 3%.
Do you think there's any sort of problem with availability of these jumbo mortgages? Because anecdotally, you hear some banks, I think Wells Fargo might have been one of them, kind of examining the product. Any reason why buyers of kind of those mega dollar homes might need to have a little extra time or concern about getting that mortgage?
Yeah, definitely fewer lenders in the marketplace. Without a viable secondary market, and with the Federal Reserve basically making the government-backed loans the only game in town as far as investors are concerned, lenders didn't want to get stuck with a hot potato. And so a lot of lenders stopped taking applications for jumbo loans simply because they weren't so sure they were going to be able to sell it. However, it's credit is still available. You're just going to have to search around a little bit more. Not as many lenders are offering them. Look at local community banks. We see a lot of very competitive rates offered in that case, and they hold those loans in their own portfolio oftentimes, so they're not dependent on selling that to somebody else.
Yeah, I've heard investors kind of saying that as well, that those local banks, they like some of that exposure. No one's crying for people who, are buying $1 million home and facing a higher mortgage rate. I'm sure they've all still come down, but at some point, is there enough dysfunction in the market that it would warrant some kind of Fed response or intervention?
I don't think we're there. I mean, when you look at jumbo rates, they're still low. They're still well below 4%, still in the mid threes in many cases. So rates on jumbos have come down this year. They just haven't come down nearly as much as the lower conforming rates. And there is a precedent for this, Kelly. In the financial crisis, these spreads blew out. It took 5 years for that to normalize. So this isn't something that's likely to go away overnight.